Hello and welcome to Business 7, your weekly financial and economics program. In tonight's program, we're going to take a look at a lot of energy and green energy news. Please stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
Let's first take a look at the 5 top business stories which made headlines in Africa over the past week. This report by Reuters.
Here are 5 business stories making headlines in sub-Saharan Africa this week. The International Monetary Fund's executive board on Wednesday approved a $3 billion 3-year loan program for Ghana, unlocking an immediate disbursement of about $600 million. It's a potential path out of the worst economic crisis for a generation in the West African country, which the IMF said is now targeting $10.5 billion of external debt service relief from 2023 to 2026. South Africa will auction at least 10 new onshore blocks for shale gas exploration in the environmentally sensitive Karoo region, a government official has said, as the country eyes alternative energy sources amid its worst ever power crisis. Fracking in the Karoo Basin, a vast area covering more than half of South Africa's land surface, has been shelved for a decade because of resistance from environmental activists and farmers, as well as regulatory uncertainty. Uganda said on Thursday that construction of its much-delayed $2.2 billion standard gauge railway will start this year. That's a welcome development for importers and exporters, who have long endured sky-high transport costs in the landlocked country. Kenya-based commercial bank Equity Group Holdings announced on Tuesday a pre-tax profit jump of 10% in the first quarter of 2023 to 16.9 billion Kenyan shillings or $124 million. Equity, which operates in several countries in Central and East Africa, said that was as its loan book rose by just over a fifth. And finally, the African Development Bank is proposing to fast-track and front-load $3.5 billion in compensation to white farmers whose land in Zimbabwe was taken away from them during the Mugabe era, the bank's president said on Monday. Akinwumi Adesina said the new proposal, after farmers turned down an initial deal, would help leverage the capital markets to fund the compensation without adding debt to Zimbabwe. But he did not provide further details.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankvintage.com.na for only 447 Namibian dollars per month. Bank Vintage, a member of Capricorn Group.
Namibia recently hosted its International Energy Conference in Windhoek. Now, our sister program, Klets Kompas, had an interview on this event, and we're bringing you the latest from there now.
Let's talk about the recently concluded conference. What for you are the big takeaways going forward in the sector?
Yes. So the conference was held from the 25th to 27th of April and under the theme Shaping the Future of Energy Towards Value Creation. So I think the main takeaways is, first of all, is defining what is value creation. And that is different from different perspectives. I think from the government point of view, what came out clearly was, how is this resources going to benefit the Namibian people? Is there gonna be job creation? And then of course, from the investors' point of view, it is, return of investment, as well as, how do we create an enabling business environment for Namibians to participate, for international to participate. In terms of key takeaways, we had a lot of experts, local and international experts, come and also share lessons learned and good practice. And what is clear is that public and private sector collaboration is critical in the industry. What is clear is that in terms of value creation, how are Namibians going to participate in the oil and gas energy sector? What is clear is that we have to protect our environment as we exploit the resources, and also to understand the global context that, we're going through energy transition issues, ESG issues, and with ESG, which is environment, social, and governance matters, from an Africa point of view, the social is a big component because we have many people living in poverty, energy poverty, which translates to lack of infrastructure, etc. But at the same time, we have a beautiful environment to also protect. So how do we balance all those factors for the benefit of Namibia and the investors who are investing a lot of money in the country?
The Kudu Gas project were discussed again. Yes. But I think, looking at the very promising offshore oil finds made the last year or two.
Yes.
Aren't government, too hasty with thinking it's only going to take a couple of years before we can have production? What do the experts say?
Well, I think the experts, maybe first to speak on the Kudu Gas. Yes, BW Kudu was there to speak about the project, and from the discussions, there's a bit of traction, and I think traction because the role of natural gas has also increased. It's become critical in terms of clean energy and energy transition agenda. So I think globally, natural gas is a great option. So there's traction in that end. In terms of the second question, which is very important, it's very important the experts are saying that it's very important to manage the expectations. So the companies were talking about, 3 to 5 years. Some experts are saying, 5 to 7 years. So it is a process. It's not an overnight thing. So there is a journey to it.
I want to just ask about Kudu because I think that's a long-term concern for people is that the required investment is so big that, the gas that people will use will be expensive. What is your take on that? Will it be cost effective as an alternative in Southern Africa, because obviously we want to pull in South Africa and maybe even other neighboring countries in that circuit?
Yeah, well, that's a tough question. I think, investors will not put money into a project if it's not viable. And then also it will take, collaboration and partnerships to share the risks. One of the key discussions at the conference was, sharing risks and rewards. So, I think they will not pursue it if it's not viable. But also I'm just reflecting on the conversations. So I think maybe it's best to talk to the BW Kudu on that.
I think the resource curse, as it's often called, was mentioned again. How do we make sure that we do not fall in that trap? It happened to the English with the North Sea oil finds. It happened to Holland. How do we prevent that?
Yeah, hopefully our resource will be a blessing to Namibia. That's my vision. So in terms, the resource curse dilemma, it's a reality for many resource-rich nations. And it speaks to how, you can be a resource-rich country, yet the country does not see benefit, the people do not benefit. So there's a couple of policy interventions that countries take to avoid this kind of issue. I think one of them is proper planning and having a vision for where you want to go. So if the likes of the United Arab Emirates, the UAEs, the Qatars, who have a long-term plan in terms of, okay, these resources is also for future generations, it's not just for today. So the Namibian nation has to be very intentional about what can this resource do for us, also investing in education. It's very important that we educate our people. It's very important that the Namibian companies and people can participate in the industry through policies such as local content, where you look at the value chain and say, okay, where can the companies participate? Not everyone's going to have access to oil blocks, but there's a big service industry that comes with the industry. Also, other countries like Norway, for example, they have the Sovereign Wealth Fund. Namibia also recently created one a few years back, the Vilvicia Sovereign Wealth Fund. So that is, you have to put aside money for future generations and also to deal with the shock from the foreign currency that's going to come in the country. So there's different strategies countries take to avoid this. And then, of course, transparency and governance is very key. So through policy interventions, also companies have obligations from their countries to come and do the right thing in the countries that they're investing in. So it's an holistic approach, and I know it's a concern of many Namibian people's minds, but it just depends on having a vision for what the benefits can be.
Does the conference also aim to rope in or attract new investors?
Mm-hmm. No, definitely. I think this year we received around 500 delegates. I would like to, around 75% of the delegates were new delegates from all over the world. So you can see that Namibia is on a global stage in terms of our recent finds, in terms of also the pursuit of the renewable to become a renewable energy hub. So the conference, because when Rich Africa Consultancy, when we created this platform 10 years ago, the idea was to create a thought leadership platform. So just to go beyond the talk shop, you bring academics, international experts to share their experiences so that Namibians can also learn. We streamed the conference on NBC and also on YouTube, just to give also accessibility to the men on the street if they want to learn about the industry.
Nigeria this week inaugurated the biggest petroleum refinery, privately owned petroleum refinery in Africa. This report was filed by Reuters, and just after that, we're also taking a look at the problems and the money that Nigeria will need to clean up oil spills.
Nigeria on Monday commissioned the massive Dangote refinery funded by Africa's richest man. Their aim is to transform the country into a net exporter of petroleum products. But analysts are warning that feeding the massive petrochemical complex with a constant supply of crude could be a problem. For outgoing President Muhammadu Buhari, the Dangote refinery is the answer to Nigeria's repeated fuel shortages, the latest of which hit in the run-up to February's disputed elections. $23.3 billion was spent last year on petroleum product imports, and around 33 million litres of petrol are consumed each day. The refinery plans to produce 53 million litres per day. Surplus petrol would be exported, turning Africa's biggest oil producer into an export hub for petroleum products. Speaking at the commissioning ceremony, Aliko Dangote said the priority is to ramp up production.
To ensure that within this year, we are able to fully satisfy our nation's demand for higher quality products to enable us to eliminate the tragedy of importing dependency and stop import dependency and stop once and for all the dumping in our market of toxic substandard petroleum products.
There could be a hurdle. Nigeria's oil production has been declining due to theft, vandalism of pipelines, and underinvestment. According to economist Kelvin Emmanuel, lower production could limit state-owned oil company NNPC's ability to fulfill an agreement to supply Dangote refinery with 300,000 barrels per day of crude.
Of NNPC failing is that he's going to be relying on international oil traders who are bringing in oil and selling to him in FX. Yeah? If you sell oil to him in FX and he refines, he's going to be selling petrol to you in FX. Prices are going to go up.
Monday's ceremony was attended by Buhari and 4 other presidents from the region. The complex also features a 435-megawatt power station, a deep-sea port, and a fertilizer unit. Nigeria needs $12 billion to clean up decades-old oil spills in the southern Bayelsa state over a 12-year period, a new report said on Tuesday. And the Bayelsa State Oil and Environmental Commission also singled out those it said were most responsible: oil majors, Shell and Eni. The Commission of International Experts was set up by local government in Bayelsa, one of the main oil-producing states in the Niger Delta. The region has, for decades, been blighted by pollution, conflict and corruption related to the oil and gas industry. Oil majors operating the Delta have long faced legal challenges over spills. They mostly blame sabotage and vandalism of pipelines and illegal refining. A spokesperson for Eni said spills were due to theft to feed illegal refineries as well as illegal exports and sabotage. The company undertook to remedy all spills, the spokesperson said, adding that Eni conducts its activities according to the sector's international environmental best practices without any distinction on a country basis. A spokesperson for Shell's Nigerian subsidiary said it was not privy to the final report and could not comment. Among the Commission's findings was that toxic pollutants from spills and gas flaring were many times higher than safe limits in samples of soil, water, air, and in blood samples from local residents. Toxins that cause burns, lung problems, and risk of cancer were widespread, the report said, while oil company-led cleanups were often poorly executed. The Commission concluded that there were failures of strategy, prevention, response, and remediation by oil companies.
Thank you so much to FMB for this opportunity. Thank you so much to FMB. What an experience. I never got to do shopping in 5 minutes, but look at all this.
South Africans are in for a tough winter with their power problems being absolutely endless. Reuters filed this report.
South Africa's state power utility Eskom may have to increase power cuts to an unprecedented level this winter, a company executive said on Thursday. The country grapples with its worst power crisis on record, and the gap between supply and demand is expected to increase in the coming winter month. Eskom has not yet gone beyond Stage 6 power cuts. Segomoko Shepherd is Eskom Group Executive for Transmission.
We may have up to Stage 8 load shedding if our interventions to reduce demand and improve reliability are not effective.
That means 16 hours of outages in a 32-hour cycle. Stage 8 is just one scenario that Eskom is preparing for if its interventions are not effective, he said, explaining that the power cuts are necessary in order to avoid grid collapse. Power cuts have had a severe impact on South Africa's economy, reducing GDP by about 5% in 2022, Eskom said.
With the help of the International Monetary Fund, Rwanda is making big strides in going green. This video was supplied by the IMF.
The transport sector here in Rwanda contributes 60% in terms of the general emissions in the country. We think we can help the country move from fossil fuel-based mobility to green mobility.
Jerry Ndaishiyimye is part of a new generation, transitioning Rwanda's economy to a more sustainable electric future.
We offer the electric vehicles themselves, we offer green mobility solutions for goods and people, and we offer charging infrastructure.
It's a big challenge, and he's not doing it alone.
We have tax incentives, duty-free, excess duty-free, no VAT, and all this is helping us in terms of reducing the end consumer price. This is a charging infrastructure. You plug it there and then it charges them.
Jerry's startup is growing, thanks to help from the Rwandan government.
You can't talk about economy without taking care of environment. Rwanda has chosen to put environment at the heart of everything we do. We have set a target to reduce by 38% our greenhouse gas emission by 2030.
Rwanda's climate goals are being supported by a new IMF initiative. The Resilience and Sustainability Trust offers long-term affordable financing, helping low-income and vulnerable middle-income countries.
Rwanda is the first African country to benefit from the new Resilience and Sustainability Trust, and it has decided to invite neighbors and put in front of them their own experience as an example for them to follow.
Good morning, ladies and gentlemen. Welcome to this morning's roundtable discussions.
Some people may not understand it. Why is IMF involved in the climate change and climate financing? It is because the impact on our economies is huge.
For the last 4 years, we have been hit by flood. Drought and flooding are very disastrous, and they affect the economies negatively.
And from my own country, Kenya, we are actually going through the worst drought in the last 40 years. There is a challenge, given that most countries are struggling, given the debt levels they have, so there is no fiscal space.
Africa has contributed very little to the problem, but Africa is already suffering the consequences of climate change in a very dramatic way.
Good afternoon. Welcome to our very youthful corner with the good air. So my name is Ineza, but as you know, you're here.
For Rwanda's young climate activists, meeting the challenges of a changing planet is no longer a choice.
Don't mess up this time, because there's no more excuse left on the table. Science is clear, the human impact isn't clear, and the innovation is available. We all know that we have a responsibility. We just want to be all part of a solution today, now.
That's it for Business 7 for this week. We're playing out with an infographic animation by the International Monetary Fund on the global growth prospects. Until next week, goodbye.
Inflation has gone up a lot recently. And to help bring it down, central banks have been increasing interest rates. These rising rates affect many aspects of our daily life, from how much we pay for our car loan to how much our money is worth. For instance, When interest rates go up, the value of a country's currency, or your money, usually also goes up relative to the value of other currencies. Why does that happen? Well, the higher return on investment will attract more money from abroad, increasing demand for that currency and raising its value. And when a currency gets stronger, import prices go down, and that helps reduce inflation. To give you a better sense of how this plays out, let's look at what happened last year with the US dollar. The Federal Reserve made the steepest series of rate hikes in more than 2 decades, raising its policy rates 7 times in 2022. This was needed to bring inflation under control and keep the US economy stable. The higher interest rates boosted returns on US assets, increasing demand for the dollar and raising its value relative to other currencies. And that had a global impact, because about half of world trade, including oil, is invoiced in dollars. So what does that mean for the rest of the world? In the short term, a stronger dollar can increase inflation pressures in other countries, because it raises the prices of imports that many emerging markets and developing economies rely on. And for economies with high dollar-denominated debt, a rising dollar can weaken economic growth or even cause debt distress or financial crises. That is because a strong dollar makes debt in foreign currency harder to repay, leading companies to reduce investment and possibly even pushing some into bankruptcy. This puts these countries' central banks in a difficult position. They need to raise interest rates to address inflation, even though that poses risks to growth and financial stability. Countries with high inflation must raise rates to bring prices back under control. This is a priority because the longer inflation stays high, the harder it will be to bring it down. But central banks may also dig into their toolbox for other instruments beyond interest rates. And at the IMF, we provide central banks and policymakers with advice that can help mitigate risks to growth and financial stability. For example, central banks can intervene in the currency market, which could be helpful in some countries that have done much of their borrowing in dollars or other foreign currencies. If needed, they can also provide liquidity support through asset purchases. This will help steady the financial system. There are downsides to the use of these tools, especially because they can make it more difficult to understand the position of the central bank's monetary policy. For instance, central bank asset purchases could give the impression that monetary policy is loosening, even when that is not the case. That's why we recommend that these tools must be used with care and be communicated carefully. It is also important that they are deployed only sparingly and temporarily.